The two most asked questions I get on a daily basis is, Dan, where's mortgage rates going? Because I'm closing on my house in December, or I'm building a house and it's coming due in January, and I don't know, should I lock? What should I do? So that's probably the number one question I get. And number two is, where's the housing market going from here? So I predicted at the beginning of the year, basically we'd see a completely flat market. And we'd see some markets going down, maybe double digits, and others going up, maybe just a sliver. And how did all those fare? Well, that's what we're going to talk about a little bit today. So the first thing I want to address is where rates are going to go and where we're going to go from here. So to kind of do that, we have to look at the economic data, because the Federal Reserve, every meeting they come out, and every time they're in the mainstream media, they're saying, well, we're data dependent. So we want to take a look at what's going on with the economic calendar. The good news right now is there's really nothing on the agenda that really should throw a curveball at anything. So the first thing we look at it on a daily basis is, what's the economic calendar look like for today, for the week? And then we kind of analyze that data. Should it play a big role in the rates? And then let's take a little bit of a glimpse on what I do, how I focus on the real estate market, on where prices are going and so forth. I'm going to give you a quick little tool on where you guys can find this data, basically at your fingertips. So the first thing I do on a daily basis is I go in and I check out where rates are, the economic news. I go to CNBC just to see the headlines. And Janet Yellen, she's this Treasury Treasury Secretary for the Biden administration, and she's answering some of the issues out there right now, and why are the voters so negative on the Biden administration, especially the economy. And she says she blames it on food and the prices of rent, which is AKA housing prices. So she's like, we're putting a big dent in a lot of these things, but I just don't think the average consumer out there right now feels that there's really anything going on in the background. So that's just a little bit of just a little bit on what's on the agenda today. But what we want to focus in on is the economic calendar. So to do that, what I do on a daily basis is I go here, and I'm going to show you guys how I filter this, because I get this question a lot. You're going to go to Bloomberg.com, go to the economic calendar. Then I go through and I hit the filters. And what I'm concerned about is I want the U.S. I want to see what the U.S. data is. I'm going to go click all these, select all the above, because I want employment, credit, balances, bonds, everything. And then I'm going to put it importance AAA. Or triple bull, whatever that sign is. I'm going to click that. When you hit 1 or 2, you get a bunch of data, and a lot of it's just a bunch of smoke and mirrors. So then I hit the apply now button. And so here's the economic calendar that we have for the week. So let's go to dissect this. There's really nothing coming in this week. They're on Monday. On Tuesday, we have existing home sales and the FOMC meeting. What the FOMC is, that's the Federal Reserve. Okay, that's what they reference them as being. The Federal Reserve meeting minutes are going to come out. They're going to tell us what they spoke about at the last meeting. I don't think that's going to really show, any guidance there on what we don't expect or we don't anticipate coming down the pike from the Fed. Then on Wednesday, we had core durable goods. And then one of the only things I see for the week that really might play some havoc on the market is initial jobless claims. Now, if initial jobless claims come in really bad, meaning not a lot of people got laid off, not a lot of people lost their jobs, it's going to send the Fed saying, the job market's still a little too strong. So we actually want the initial jobless claims to tick up to just appease the Federal Reserve. Because if the Federal Reserve is happy, it's kind of like happy wife, happy life. Well, if the Federal Reserve is happy, well, happy economy. I'll put it that way. Happy markets, meaning interest rates will continue to come down and the stock market will continue to do what it's been doing. Then on Thursday, we have observance of Thanksgiving. And then on Friday, it'll be a dismal day on Friday. Nothing's going to happen because nobody's going to really be working. So that's the data that we have coming in right now. So what I wanted to explain to everybody is the biggest question that I get asked on a daily basis. What in the world's going to go on with rates? So what we try to do here is we try to forecast what is the Federal Reserve going to do, because everything else pivots around that. So what we monitor on a daily basis is what the Fed is going to do. So we go to the CME group. So that is cmegroup.com. And then you're going to trickle down and try to find the Fed Watch tool. Basically, this is going to tell us what the probabilities are that the Federal Reserve is going to do anything at the next meeting. So to put this in context, the Federal Reserve controls one interest rate. And that one interest rate is the federal funds rate. Currently, that rate is at 5.25 to 5.5. There's a little trend right there. There's a gap. So it's 5.25 to 5.5. So let's see what the markets are telling us in regards to what the Federal Reserve is expected to do at the next meeting. So this tool is basically this. What's the likelihood that the Federal Reserve will change the federal target funds rate at the next meeting? Well, again, right now we're at 5.25 to 5.5. So if you scroll down through this data, you're going to see right through here. I'll get my head out of the way just for 1 second. So you're going to see at the bottom of the screen, you're going to see right down through here, the rate at 5.25 to 5.5. There is a 99.8% probability that they are not going to do anything. Well, remember just about a month ago or so, everybody was saying that the Federal Reserve is going to raise rates one more time this year. And I was on the sidelines saying, no, they're not. Because as this data comes in, if you really monitor the data that they follow, especially the housing, when we come to see the equivalent rents category, we're seeing that number drop and drop and drop. That number that they focus in on is about 40% of the inflation numbers that we see on a daily basis. So that number is crashing. So once the Federal Reserve actually gets their data current, or I'll say more accurate, they're going to see where inflation is in the twos, and it's going to make the markets much, much happier. So right now there is no intentions from the Fed, or no intentions even from the market, that the Federal Reserve is going to do anything. And I don't see any data basically from here kind of for the next couple weeks at least that really shouldn't trigger anything. So basically right now it might be a little bit of a where the markets are just dissecting this and we're kind of just staying steady. I don't know if you've really been in the market to buy a house, or you've looked at interest rates for the last 5 years or so. Normally rates don't really move. They'll tick up just a hair and down a hair and up a hair. In this market, you're seeing rates on a daily basis maybe move in the increments of 0.25%. That's really never happened in history other than this little gap that we're seeing right now. So that's why it's very important that you guys know, what you're getting into and how to track rates on a daily basis. So the next thing we want to look at is housing prices. Where are housing prices? Where are they going? Where's that crash that everybody spoke about? Well, I was on the sidelines at the beginning of the year as well, saying the housing market is going to be completely flat. And, I missed it. Well, I missed it kind of on a good note. Some markets are seeing double digits increases. Look at Hartford, Connecticut. It's up almost 12% this year, 2023, in the housing market that was supposed to be dismal. Look at what happened is we have a lot of people sitting on the sidelines because they're like, prices of houses are way too high. And then we saw mortgage rates go from basically 4% to 8%, which was supposed to crush the markets. Well, we're seeing an average house right now. If you go down through here and you look at where is it? It is in here in a second. The United States, right in the middle of the screen that you have right here, is you're seeing the United States right in there is up 2% on average throughout the whole country. Now, yes, there are some markets that were way overheated previously, and I expected that. I expected a couple different areas: Southern California, parts of Arizona, Austin, Texas. Austin, Texas was the hottest market in the last couple of years, and it's giving back some of those gains. You're seeing it's given back about 9%. New Orleans giving back about 9%, and then you can see where other areas follow. But if you look at this, the average rate through here, the biggest crash is 9% in Austin. But on the flip side, you have a lot of properties from Hartford, Connecticut. Well, let's just go down through here. From Baltimore, Maryland, all the way up through here. These homes have gained at least 4%. That's the national average on a long-term basis. So a huge portion of the markets are still the average returns of 4% or higher. So a lot of people are still going to disagree with me, but guys, this is the data. You can find out any data that you want, but I use Zillow.com, and then you're going to go down through and do research and data, and you're going to find all this information. So with really no news out today, what's going on in the bond markets, because I follow the bond markets to be able to give you guys insight on what's going on with mortgage rates. And this is what we see. We saw the 10-year Treasury just about a week and a half ago. Everybody was freaking out because this yield was at 5%. 5%. It's down about 60 basis points since that time. And then also over here, here's what you're seeing. This is what we follow on a daily basis. This is the MBS right there, is a mortgage-backed security. It's a mortgage bond that trades on Wall Street. This is what we follow because this has direct correlation as what's going on with your mortgage rate. So right now we see this down 13 ticks, not really that much. So what we want to focus in on right here, this number is what's going on, the price of a bond, the mortgage-backed security bond. All you need to know is this. If this number right here goes down, that means the rates are going up. So this is what's going on with the price. So if the price goes down on a bond, it pushes up its yield. Okay, so that's what's happening right now. So we're going to see rates maybe go up 0.03. Nothing really to write home about. Last week we called it on several the days where we saw rates come down and down and down. Where rates were, where are they today? We go over to here, Mortgage News Daily. These are the top 6 programs people use when they're buying their first house. You can see right over there, the 30-year fixed. Remember that was 8% just 2 weeks ago? 8%. It's down almost 0.75%. So what should you do, or what can you do if you're out there, you're looking to buy your first house, or you're building? Like I said, a lot of people are watching this channel that are building, saying, what's going on with rates? Well, I'm expecting rates to just basically be stagnant from now. But let's say you locked in at that high rate and rates dropped dramatically in the last 2 weeks. What can you do? Or what should you do if you're out there, you're saying, okay, my housing market isn't crashing. I've been sitting on the sidelines for the last 2 years watching house prices go up and up and up. Finally, I can't continue to rent. I would love to buy. How do I dissect? How do I figure out, can I qualify to afford a house in today's market? Well, the best thing I ask you to do is go over to our website. It's therateupdate.com. Here it is. The first thing is, if you locked in already and you want us to analyze to see if there's something better out there for you, we'd love to help you. We're actually a federal lender. So I work at a federal bank. I'm licensed in all 50 states as well as Puerto Rico. And we're also one of the country's largest mortgage brokerages. We're set up with over 70 different of the country's largest mortgage companies, lenders, credit unions, and banks to be able to offer you their programs and their rates. How can we analyze all your data to figure out, is there a better rate out there in the market for you? Well, the best way to do it is right there. This is a loan estimate. When you put in your application and you get pre-qualified, what's going to happen at that point, you're going to get a package from the lender, and it's going to say, okay, here's your rate, here's the terms, here's everything. But you might have said, okay, maybe I locked in prematurely. So call that lender, see if they can get you a lower rate. If they can't, please reach out to us. We'd love to help. So upload your loan estimate right into that tab right there. If you're out there and you're like, Dan, I'd love your assistance. I love you guys, how you have a plan out there, how I can buy in 6 months. You have programs like USDA, FHA. The conventional programs would only now require 5% down if you're looking to buy up to a 4-unit building. We'd love to navigate all these programs with you, especially a lot of the down payment assistance programs that we offer. So how do you get in touch with us to do that? Well, there's 3 different ways. First, there's an Apply Now tab right there. Click that button. It's going to ask you a series of questions. It's kind of unique, not like most people do when they click that button. You're going to put in an application. Ours is a little different. It's going to ask you several questions to kind of vet you, to figure out what program is best for you. And then we're going to assign you with a loan specialist on our team that specializes in that loan specifically. But if you're out there and you're like, Dan, can I call in? Can I email you guys the question? Because I can't wait right now. I really want to check in, or I have a house on the market that I really want to put in an offer in. I really don't want to put in an application and wait. Well, call us. All you need to do is scroll down to the bottom of the screen. You're going to see a whole bunch of data here. Tell us about yourself, choose a plan, blogs, how to purchase, refinance, mortgage calculators, and the works. Well, then when you get down to the bottom here, you're going to see 2 different ways to reach out to us. The first one is an 800 number. It's 844-775-5626. Please give us a call if you like, or you can email me directly right here at dan@therateupdate.com. Thanks so much for watching, guys. God bless. I appreciate you guys viewing my channel and hope you find value with it. If you haven't yet, please subscribe down below so make sure you get an update every time I put out a video. Take care, guys. Have a great day. See you tomorrow. Bye-bye.